want to talk more about the markets right now with Sylvia Jablonski. She's the CEO and Chief Investment Officer of Defiance ETFs. And Sylvia, you pointed out something pretty interesting. If we take last week's gains into account, we're really just back to where we were a year ago.
Yeah, we're really just back to where we were a year ago, which is not necessarily what the market had anticipated, right? We came in sort of guns blazing. We're going to have tax cuts. This is going to be make America great again. The booming 2020s, the roaring last half of this decade, and tariffs really threw us for a loop. And we experienced some of those 2009 types of market activities where we saw markets going down 9% and then kind of recovering back up 8% in that time period. So volatility has been the name of the game.
What's an investor to do in that volatility?
Yeah, so I would use volatility to your advantage as an investor, right? I think as an investor, you can't necessarily hope that it's going to play out in the next couple of weeks, but multiples have contracted. All of the major Mag 7 stocks are down. So if you're not allocated there, they're on sale. If you have large allocations to Mag 7, you can go X Mag. You can look at different types of companies with some of the momentum plays like AI and quantum computing that are on sale, and just collect your acorns for the future.
So buy the dip. That was the strategy.
Yeah, buy the dip.
You're saying to do that once again. That must mean that you think things are going to look better on the other side, that the tariffs get resolved, that trade goes back to some sort of normal lesson, or do you think that this is a longer-term play where there's more manufacturing that's brought back to the United States?
Well, I'm not sure, but what I do know is that so far we have seen that there is a Trump put, right? It's a little bit lower than maybe we had expected it to be, but it seems like the question of, are they crazy enough to let the entire market crash and let it all fall apart? The answer so far has actually been no, right? So I think that the markets have saw, some solace in that and have rebounded from the lows. I think we have to see what happens. We definitely need fiscal and monetary policy on our side. We need a resolution on the tariffs. There's still a lot of uncertainty, particularly around China. What happens around July 4th with these tariffs? And so I expect volatility until we get those answers. But again, I'm just a longer-term investor with a view that if I hold stock for long enough, it's going to appreciate. Look at the last 10, 20, 30 years. We ride all of these things out, whether it's COVID, the financial crisis, whatever it might be. So invest for the long term.
What's the long term? Because there are some people who don't have a long term. If you're nearing retirement, if you've got things you need to pay for, like a school tuition coming up with the 529B, what's long term versus short term?
Yeah, fair enough. I do think that within the next 2 years, we're going to see some sort of reset here and seeing markets, gain higher ground. And again, multiples have contracted. If you look at the just broad-based S&P, the NASDAQ, we're still down this year. There's an opportunity there to just broad-based, allocate, again, go XMAG. But I also think that there are other plays like things like crypto. MicroStrategy is up 20% year to date. Gold is up 20% year to date. There are asset classes that are performing. Hinge, you guys were talking about it earlier. There are these AI healthcare types of plays that are opening new opportunities for investors as well.
We just had the chairman of the House Ways and Means Committee on, Jason Smith. You're anticipating that all of these tax bills get passed, that there's something in it basically for everyone there too?
I think that the administration is very eager to pass these different, tax relief policies, and we'll have to see what actually happens. I do think that there's going to be some sort of sentiment around what happens with tariffs that will weigh on the minds of, the bill passers here. But I would expect something to get passed along the lines of tax cuts.
Does it matter what's in it? Does it matter if you give away everything that the president had talked about in terms of no taxes on tips, no taxes on overtime, no taxes on Social Security? Does it matter if there are pay-fors for those things along the way, too?
I think, yes, it matters to the economy. What matters to the markets, though, I think, frankly, it's just going to be the more cuts, the better in terms of how the market views things, in terms of what happens to the economy. It's a separate.
What about the Treasury market, if there are not pay-fors for some of these things?
Yeah, I think a lot of that could potentially impact, essentially inflation, Americans' views on, the future of inflation and how tax cuts can impact that too.
Okay, but all in all, you think that this is a lot of noise that eventually we will make our way through?
Yeah, it feels like it was a little bit of high-stakes poker, go in hot and then, pull back, leave some room for negotiation, and let's see where we land. The clarity will come around what the final tax policy is, and we don't have that yet. But again, I do think that volatility opens up opportunities for investors to buy on dips here.